Hey everyone, welcome back to the channel where we talk about smart money moves, growing your wealth, and making your retirement dreams a reality. Today, we're diving into a topic that's becoming a major crisis for retirees and those getting close to retirement: not having enough consistent, low-risk income. I mean, let's face it, gone are the days when you could simply sit back and rely on a pension to fund your golden years. And Social Security is not exactly going to bankroll that dream lifestyle, is it? So what's the plan? How do you make your savings last while still being able to enjoy life? We've got the answers. So stick around. Let's break it down. Even if you've worked hard, saved up, and built a decent balance in your 401k or retirement account, the big question is, how do you turn that pile of money into reliable income without running out of it? Most of us are told that the best way to grow our wealth is by investing in stocks. And hey, that's true over the long term. But here's the problem. Retirees don't live in the long term. You need income now, not 20 years from now. And what about dividends? Sure, they're a popular option. But have you seen the yields lately? The S&P 500, which is where most people's money ends up, whether through index funds or individual stocks, pays a measly average of 2%. That's peanuts. Let me put it in perspective. Let's say you're sitting on a cool $1 million in your portfolio. Sounds like a lot, right? Well, with a 2% yield, you're only pulling in $20,000 a year. That's just $385 a week. Not exactly the retirement lifestyle you imagined, is it? And if you've got half that amount, $500,000, you're looking at just $10,000 a year. That's barely enough to cover basic living expenses, let alone enjoy life. So, what's the solution? I'll get to that. But first, let me bust a myth about so-called safe dividend stocks. You've probably heard of something called dividend aristocrats. These are big-name companies that have consistently raised their dividends for 25 years or more. Sounds great, right? Reliable income from the best of the best. But here's the reality. They might not be as great as they seem. Take General Mills, for example. It's a household name, and they've been raising their dividends for years. But here's the catch. When you buy a dividend stock, you're not just buying the dividend, you're also buying the stock price. And with General Mills, while the dividend climbed, the stock price took a nosedive, dropping 49% in just 2 years. That means for every dollar you made in dividends, you lost way more in the stock's value. Ouch! And General Mills isn't the only one. Even giants like Johnson & Johnson, Coca-Cola, McDonald's, and Walmart have had their fair share of struggles. Sure, they've raised dividends, but their stock prices have been a roller coaster ride. And let's not forget legal issues or market downturns that can hammer even the strongest companies. Remember, when you're retired, you don't want to depend on selling shares in a market crash just to pay the bills. Speaking of selling shares, let's talk about another piece of outdated advice you've probably heard 100 times: the 4% withdrawal rule. This approach basically says you can safely withdraw 4% of your portfolio every year without running out of money. Sounds simple, right? But here's the problem. It assumes the stock market will always cooperate. And as we all know, the market doesn't care about your retirement plans. If a crash hits like it did in 2008, you could be forced to sell more shares at rock-bottom prices just to make ends meet. That's a recipe for running out of money way too soon. So what's the solution? How do you avoid the pitfalls of low dividends, volatile stock prices, and outdated withdrawal strategies? It all starts with finding investments that pay meaningful dividends. 6%, 7%, even 8% or more. And no, I'm not talking about risky, high-flying stocks or sketchy investments. There are smart, sustainable ways to build a portfolio that generates reliable income without having to touch your principal. Imagine living off the income your investments generate and never having to sell a single share. That's the dream, right? In the next part of this video, I'm going to show you exactly how to build this kind of portfolio. We're talking about a strategy that gives you consistent income, protects your capital, and lets you sleep easy at night, even during market downturns. Trust me, you don't have to settle for 2% dividends or outdated advice. There's a better way to retire, and I'm here to show you how. Alright, that's it for part 1. If you're ready to learn how to give yourself a pay raise in retirement, hit that like button, subscribe, and turn on notifications so you don't miss part 2. And let me know in the comments, what's your biggest concern when it comes to retirement income? Let's chat about it. Thanks for watching, and I'll see you in the next one.